Okay, so we have HHS Corporation. We want to know, assuming that they're reporting their financial statements under US GAAP, what the other comprehensive income amount would be that they would report in the current year. Okay, so very simple FOOPB mnemonic type question. We need to know what is included in other comprehensive income. Okay, so the F in our FOOPB mnemonic stands for foreign currency translation gains or losses. So the $1,000 amount would be included. Same goes for the available for sale securities that result in unrealized gains. The U in our FOOPB mnemonic stands for unrealized gains or losses from available for sale securities. All right, so not trading securities, not held to maturity, available for sale. So the $4,000 would also be included. The surplus from revaluation would not be included. Once again, this is under US GAAP. If for whatever strange reason they were asking for this under IFRS, then this would be included. All right, so remember, revaluation surplus is not going to be included under US GAAP. All right, so $5,000 would be the correct answer choice. The $1,000 from the foreign currency translation gains and the $4,000 from available for sale unrealized gains.
Equivalents have a maturity of 3 months or less.
Okay, so we're talking about Burns Corp. They have a bunch of stuff going on here, and ultimately, what is the call of the question? We want to know which of the following amounts would the statement of comprehensive income report as other comprehensive income or loss. All right, so that's a verbose way of saying what is the total amount reported in OCI. All right, let's not make this more complicated than it needs to be. So let's attack these one by one. We got to read each of these and ask ourselves, is this included in OCI or not? Sales revenue of $45,000. Sales revenue is going to be excluded from OCI specifically. Right? At the end of the day, there's two components to the calculation of total comprehensive income: net income plus other comprehensive income. Sales revenue has to do with the calculation of net income. So this is going to be excluded. Loss on early extinguishment of bonds, $36,000. This has nothing to do with our FOOPB mnemonic, right? This is going to be excluded as well, right? This is going to be included in net income since it's going to be a recognized loss. We're focused on unrealized gains or losses, okay? Specifically those from available for sale securities. Realized gain on the sale of available for sale securities, $28,000. Why is that going to be excluded? Well, you might be thinking available for sale securities, and that is the right thought, but it's only unrealized gains from available for sale securities that would be included in OCI, not realized gains. Unrealized means maybe we haven't sold it yet. Okay, so it is still an unrealized gain purely from the fluctuation in value. Okay, so US GAAP is telling us that unrealized gain is what needs to be reported. All right, but keep in mind, it's unrealized gains and losses from available for sale securities. So therefore, the unrealized loss on the available for sale security of $17,000 would be included. Right, this is the U in our FOOPB mnemonic. And finally, the loss on the write-down of inventory for $3,100 would be excluded, as this would be included in the calculation of net income, right? Losses on the write-down of inventory is not within our FOOPB mnemonic, so we're not going to include this. Okay, so at the end of the day, that's why the total loss that is reported in other comprehensive income is going to be $17,000. All of this other junk would still be included in total comprehensive income, only it would be included in this net income calculation. We're asking for other comprehensive income. All right, we can't just memorize it. We need to also see it. We need to see where it's being impacted in this total calculation. Guys, we got an other comprehensive income question. This one wants us to kick it up a notch and actually calculate the amount that is reported in other comprehensive income. We need to also be able to calculate how this would impact the total amount reported as other comprehensive income. So the best way to go about this is fire this up one by one. All right, so keep in mind, they're asking for the amount of other comprehensive income in year one, not total comprehensive income. If they were asking for total comprehensive income, this net income amount would be included in the calculation, right? Because total comprehensive income is the sum of net income and other comprehensive income, but they're just asking for the other comprehensive portion of this calculation. All right, so owner contribution of $9,000, not going to be included because this is not one of the 5 elements of our FOOPB mnemonic. All right, so this is going to be left out. Deferred gains on the effective portion of cash flow hedges. The key word here is effective portion of cash flow hedges, right? That is the E in our FOOPB mnemonic, right? So this is going to be a gain, which would therefore be an increase to the total amount reported in other comprehensive income. So we're at $8,000. The foreign currency translation gain of $2,000 is going to also be an increase to other comprehensive income, right? This is the F in our FOOPB mnemonic. So now we're at $10,000. And finally, we have prior service costs not recognized in net periodic pension costs of $5,000. Okay, so we know that pension gains and losses are also recorded in OCI, but where this is sneaky is that they are referring to prior service costs not recognized in net periodic pension costs. So what's happening here is that the $5,000 of prior service costs would be considered an addition to that OCI amount in a year that it was amortized to net periodic pension costs, right? So what's key here is that it is not being recognized in the net periodic pension cost. So therefore, it would instead be reduced. So the total amount is going to be $5,000, right? The $8,000 from the effective cash flow hedge, the $2,000 from the foreign currency translation gain, and once again, going to be reduced by the $5,000 of prior service costs not recognized in the net periodic pension cost. So $5,000 is the correct answer.
Now, this is an AI CPA license question that was classified as hard, and I would say it's even harder than hard. I mean, you have to know several different treatments here, as well as being able to break down exactly what the question's asking for. Now, ultimately, we need to figure out what the amount of comprehensive income should be reported for the current year, right? So this is total comprehensive income, which is going to include net income as well as other comprehensive income, which has to be net of tax, right? So we have to add those two together. Now our starting point is going to be the company's current year net income of $86,500. We'll have to determine what to do with each of the four items listed in the question. Now remember, for other comprehensive income, we have our FUPI mnemonic, and that will help us remember the items that ultimately impact other comprehensive income. So let's go through each item. So the first one says retained earnings appropriated for plant expansion, right? So it's the end of the year, the company has retained earnings. Now what they can do is reclassify within retained earnings to show, here's what we're going to use part of our retained earnings for, right? And that's when they would appropriate it for a specific project like a plant expansion, right? But there's no impact to net income or other comprehensive income. This is purely to show users of the financial statements what they plan to do with retained earnings, right? So that's not going to impact other comprehensive income here or net income. So we're going to exclude that altogether. So this next one's difficult because we're not going to get to accounting changes and errors until a later module, but we'll get a head start here, right? And what we need to understand is that when we identify an error that relates to a prior period, well, we need to restate our financial statements. But all we're going to do is record that understated depreciation expense impact of $9,300 as a debit to our retained earnings balance, right? That's going to reduce the beginning retained earnings balance for the current year. So we're going to debit beginning retained earnings or just retained earnings for $9,300. Now think about what we would do when we normally record depreciation expense. We credit accumulated depreciation, and that's what we need to do here for $9,300. But when we look at that, that only impacts retained earnings, which is part of equity, and then it impacts accumulated depreciation, which is not part of net income or other comprehensive income, right? So even though we have the journal entry here, ultimately there's no impact to total comprehensive income, which is what we're going to solve for, so we're going to exclude that. Now this next one says unrealized loss on available for sale debt securities. Now again, we will not get to debt securities until a later module, but what we need to know, and you'll remember the FUPI mnemonic here, is that that's the U, right? So we have an unrealized loss on this available for sale debt security. Well, that's going to be recorded in other comprehensive income. Now, it's a loss, an unrealized loss, but we still need to record it net of tax. So when we multiply 8,100 of a loss times 1 minus the tax rate, which is just a quick way of getting net of tax, right? That tells us the impact to OCI, again, net of tax, is going to be an unrealized loss of $5,670, right? Because we can get some tax benefit from that. So that's going to be the impact there. Now, the next one says unrealized gain on foreign currency translation. Well, that's the F in our FUPI mnemonic, right? And when we have translation, that's going to OCI as well. Now, the unrealized gain on translation here is $3,400. Do the same, net of tax calculation, so multiply by 70%, And that tells us the impact to OCI, which is a gain here, so it's a positive number, is 2,380. So now we've gone through all four items. We've determined what will impact total comprehensive income and what won't, right? Now remember, our starting point here was net income of 86,500. We determined we have two items that impact OCI, right? So we have the unrealized loss on available for sale debt security. That netted out to a loss of 5,670. That's why it's negative, right? And then we also have that unrealized gain on translation, which was a positive 2,380, right? So our net impact to OCI, net of tax, right, is a loss of 3,290, which is why it's negative. So that's going to reduce net income down to total comprehensive income of 83,210. That's going to be our correct answer. Now, overall, again, what's the point of total comprehensive income or just comprehensive income? Well, we want to take the combination of net income, which is the current year gains and losses, as well as what we consider to be a temporary gain or loss, which is what's recorded in OCI, right? And that tells us basically our total comprehensive income, which is, again, our net income plus or minus any temporary gains or losses, right? So it gives us a complete view of what's going on in the business, and we're not just stuck by looking at net income, right? So again, the correct answer here is 83,210.